The dust has settled in 2014, and it was another record year for office investment markets. Over $17 billion worth of product traded, with offshore investors the largest buyer cohort, accounting for almost 41% of transactions by value. While Sydney and Melbourne CBDs dominated the headlines in 2014, non-CBD markets also had a record year, with transaction volumes above $5 billion, a 77% increase over 2013. Core investors will continue to focus on Sydney and Melbourne in 2015. The recent improvement in the physical markets and the prospect for rental growth provides an additional ingredient to the investment market thesis for both Sydney and Melbourne. We expect that yields will compress further in Sydney and Melbourne over 2015, and the yield spread between Brisbane and Perth and the Sydney CBD will widen. As an illustration, the current spread between Brisbane and Sydney is 40 basis points wider than the historical benchmark of 60 basis points, and it will widen further in 2015. While the leasing markets will remain challenging in the resource-dependent states, the domestic hunt for yield will see a number of investors look to seek out counter-cyclical opportunities in both Brisbane and Perth. Offshore investors will remain active participants in 2014. Last year, Chinese investors acquired $1 billion worth of office product for the first time on record. We believe this figure represents the tip of the iceberg for the investment into core income-producing assets. A number of Chinese insurance firms have acquired core product in New York and London, but have yet to make their first acquisition in Australia. Furthermore, Forbes estimates that the number of billionaires in China has grown from 66 in 2007 to 152 in 2014. A number of these investors are very familiar with real estate as an asset class and Australia as an investment destination. The investment markets have started strongly in 2015. If you require any information from me or any of my colleagues, please do not hesitate to contact us.